So for this session, our topic is itemized and special deductions. So we already talked about your gross income taxation and also your net income taxation. And we said on your gross income taxation, this does not require any deductions, while in your net income, we apply deductions. So in your net income taxation, this is normally used in your regular income taxation, wherein we have your items of gross income, subject to regular income tax. And we have here your deductions to get for your taxable income. After we get your taxable income, then we can already compute for your tax due based on your tax table. We said that your deductions can be either OSD or itemized. And when we talk about itemized, it is composed of three main deductions. These are your items of expenses. We also have your net operating loss carryover, and we have your special deductions. So just a quick overview of these three items. So for these items of expenses, these are your actual expenses that can be deducted provided under your National Internal Revenue Code as amended by your train law. Your net operating loss carryover happens in case there is an operating loss of a particular business entity. This operating loss is based on your tax basis loss. So how do we compute for your loss under your tax? We compute your loss under your tax as gross income less deduction. So if this will yield to a negative amount, then we have a loss. Therefore, when do we have a net operating loss under your tax? Under tax, net operating loss happens if your deductions are greater than your gross income. Net operating loss happens under your tax if ever your deductions are greater than your gross income. And then we have now your special deductions. If items of expenses are actual expenses which can be deducted by your uh, uh, items of expenses which can be deducted to your gross income as provided by NIRC. NOLCO is the operating loss. Your special deductions are items not considered actual or is actual but with additional deduction provided under the law. So in your special deductions, what we can see later here is not actual expenses or actual expenses. However, with an additional amount. So normally it's additional amount based on a particular expense, or there's no actual expense. However, there is an additional amount that can be taken into as a deduction. So this is provided under our laws. This is scattered over your different laws, not placed solely on your NIRC, but placed under your special laws. Sometimes these deductions can be considered as preferential rates. These are considered preferential because it is dependent on a particular type of expense or a particular type of occurrence or activity. Okay, so now we're done with your OSD. So tandaan nyo lang sa OSD, it is optional, it is dependent on the taxpayer, and it is standard. You just need to know the tax basis. While in your itemized and special deductions, we will talk about these three items. So items of expenses, your NOLCO, and your special deductions. So what are the topics in this particular session? Of course, we talk about your itemized deductions. This is composed of your NOLCO together with your items of expenses. And we have your special deductions, which is now provided under the law. Okay? So let's start with your itemized deductions. So these are different expenses. So the first itemized deduction that we will discuss today is your ordinary and necessary business expenses. Ordinary and necessary business expenses. So we said before, one principle of your deduction is that it must be ordinary and necessary for the business. It must be ordinary and necessary for the business. And it must be actual or properly substantiated. So what are examples of ordinary and necessary business expenses? Our mnemonics here is estero. Our mnemonic here is estero. So first, we have here your salaries. When we talk about salaries, it is not only your pure salary, but it can also include wages or any other form of compensation. Hence, even fringe benefits can be considered as part of your salaries. So salaries is encompassing wages, your salary per se, and your any other compensation given to employees. Next, we have your travel expenses. So expenses in connection for the travel, but take note when we talk about your travel expenses, this must be connected to the business. Okay? So it must be attributable to the business. Take note, it is an ordinary business expense. So it must be connected to the business. So even if we have a travel expense, if it's not attributable to the business, we cannot include it. Okay? Next, we have your entertainment, amusement, and recreation expense. So this is connected to development, management, and operation of your trade or business. So, for example, you have a investor, and then you dine out with that investor. You also paid for the accommodation of that investor. You can include that in your entertainment, amusement, or recreation expenses. You can include that as a representation actually. It can be considered as a representation expense, which can be included also in your EER. Now for your EER, this is subject to limit. Okay, so as we go through with your itemized deductions, as early as now, please take note that deductions can either be, okay, so di ba sabi natin, these are actual expenses. And deductions can either be deducted in full or in its actual amount or based in its limit. So as you can see, a while back, salaries and travel expenses, we did not discuss any limit as to that particular expense. Therefore, you can deduct that in full. However, now in your entertainment, amusement, and recreation expense, we will have a limit. And what is the limit, sir? The limit of your entertainment, amusement, or recreation expense is based on the net sales or receipts, and it is dependent whether the taxpayer is the seller of goods or the taxpayer is a seller of services. If the taxpayer is seller of goods, 1/2 of 1%, services 1%. So the limit of your EAR is based on your net sales or receipts. We compare it depending whether you are a seller of goods or a seller of services. So for example, we have here your sales or receipts amounting to 10 million pesos. And then we also have your sales returns amounting to 500,000 pesos. We have your sales discount amounting to 800,000 pesos. Amounting to 800,000 pesos. So that will give us an amount equal to a net sales or receipt of 8.7 million. Okay? So assuming your actual representation expense is equal to, let's say, 600,000 pesos. Okay? So we have your sales or receipt, sales return, sales discount. To get for your net sales or receipt, you just deduct any returns or discounts, including allowances. So 8.7 million. So what is the amount of your limit if ever you are a seller of goods and a seller of service? Okay. So to compute for our limit, for seller of goods, that is 1/2 of 1%. So 1/2 of 1% of 8.7 million. So our answer is 8.7 million times 1/2 of 1%, we will get 43,500. Right? Let's change this amount of expenses. It is too high, 60,000. Okay. Next, for service. For service, what is our limit? 1% of 8.7 million. So 8.7 million times 1% will give us 87,000. So how does your limit work? Your limit, you compare with your actual. Whatever is lower, that is the amount of deduction. What is the amount of our actual expense? So our actual representation expense amounts to 60,000. So we will place here 60,000. So for seller of goods, which is lower, 43.5 or 60,000? 43.5. For seller of service, which is higher, which is lower, the limit of 87,000 or the actual 60,000. Okay, so for EAR, entertainment, amusement, and recreation expense, it is subject to limit of 1/2 of 1% for taxpayers who are engaged in the seller of goods and taxpayers who are engaged with the seller of services. Okay, so always compare just the limit and the actual. Whichever is lower, you get it. Okay, next, rent expense. For rent expense, these are expenses connected to the leasing of a particular premise that is used in the business. So for example, you are leasing an area in a shopping mall. So the rent expense on that shopping mall or area should be deducted as an expense. For your rent expense, there is no actual limit. So again, salary is no limit, travel expenses no limit, rent expense no limit. But for rent expense, you just need to determine the type of the taxpayer. As to the taxpayer, if ever it uses accrual basis or a cash basis. So what is the amount of your rent expense depending on the taxpayer who's using accrual basis? If the taxpayer uses accrual basis, this is the amount incurred, regardless when paid. If the taxpayer is using cash basis, the amount of payments for the rent is the amount of our rent expense. Okay? So no limit, although we need to look as to the types of taxpayer, whether it is accrual or cash basis. And the last one, other necessary business expenses. So long that it is in connection to the business or trade or profession, we can deduct it. Okay, just a rule, guys. Expenses can only be deducted or deductions can only be claimed if ever you are engaged in a business or trade or a profession. I hope we made that clear in our previous topic as to your principles of deduction. So we're now done with the first type of expense. That is your ordinary and necessary business expenses. What is the only item here that is with limit? That is your EAR expense. What is the limit? Based on seller of goods and seller of services. 1/2 of 1% and 1%. You know, guys, in understanding your deductions, especially itemized deductions, just memorize those items with limit. Because remember, these are items of expenses. If ever it is presented to you, you can just deduct it, except if it has a limit. So test only those items with limit. We go now to your interest expense. Interest expense is another item with limit. So how do we compute for your limit? The limit is equal to your actual interest expense less the arbitrage on interest income. How do we compute for your arbitrage on interest income? This is the gross interest income. This is equal to your gross interest income subject to final tax. So take note, you can only get interest income that can be subject to final tax. If that interest income cannot be subject to final tax, then you cannot add it to your arbitrage limit. You multiply to 33%. Take note, this is gross interest income. Therefore, this is gross of any final withholding tax on interest income. What is the normal type of interest income that is subject to final withholding tax? These are your interest income on banks. Okay. So just a quick recap, normally it is subject to 20% final withholding tax. Okay. So if ever, just get for the gross interest income, which is subject to final tax. But what if the given is, if the given is net, what do? We get for your net interest income, which is subject to final tax, you divide it to 100% less the final tax rate. That is equal now to your gross. Okay, so for example, the amount of your interest expense is 350,000. So this is the actual interest expense. And then you have here interest income from bank. Let's say this is peso, 80,000 pesos. So assumption number one, if the interest income is gross of final withholding tax. Assumption number two, if the interest income is net of final withholding tax. Okay. So what is our formula to compute for your deductible interest? You get for the actual interest expense, which is equal to 350,000. You deduct the arbitrage limit. So what is our arbitrage limit? You just get for the gross interest income subject to final tax. So it is 80,000. Because we assume here it is gross, right? So 80,000. You multiply it to our rate of arbitrage, which is 33%. So 80,000 times 33%, our arbitrage limit is 26,400. So what is our deductible interest? Our deductible interest is equal to 350,000 less 26,400, 323,600. Okay? So that is our deductible interest expense. Now, what if the 80,000 is net of final withholding tax? So first, we need to get for your interest expense 350,000, and we deduct the arbitrage. To compute for the arbitrage, since we need a gross, you get first the net interest income. So sabi dyan, the 80,000 is net of interest income. You divide it to 100% less the final tax rate on that interest income. So let's say 20% yan. And then you multiply it now to 33%. So take note, we first gross it up to compute for your arbitrage limit. So we need to get first your gross interest income subject to final tax. So we have here 80,000 divided by 80%, 100,000 times 33%. So our arbitrage is 33,000. So 350,000 less 33,000, our deductible amount of interest is equal to 317,000 pesos. So guys, here in your interest expense, just be careful as to the interest income subject to arbitrage limit. Only those interest income which was subject to final tax should be included. And take note, you must only include it at the amount or at its gross amount. So if ever there is a final tax, you need to return the final tax on that amount. Okay? So we had an example wherein there is gross amount and in case it is net of final tax. Okay? Interest expense, deductible, but net of arbitrage limit. Next, itemized deduction, taxes. So this taxes again is subject to a deduction based on your actual amount. So no limit again. However, we only have certain taxes that can be deductible. So general rule, taxes are deductible. Exception to the rule, not all taxes can be deducted. So what taxes can be deducted? First, we have your income tax, we have your ST tax, we have your donor's tax, we have your value added tax, and we have your special assessment. So normally, your national taxes are not deductible. Okay? National taxes are not deductible, such as your income tax, SC tax, donor's tax, and value added tax. Now, we have this item here, income tax paid abroad if claimed as tax credit. Okay, so your income tax paid abroad can be claimed in two ways. So what are the two ways in claiming your income tax paid abroad? The first is as a tax credit, And the second was tax deduction. Okay. So if that is a tax credit, so from your tax due, you have here your tax credit. Yun yung ibig sabihin niya dito. But if you claim it as a deduction, you have your gross income less the deduction. You will include it here. You will include it in your deduction to get for your taxable income. So look at the difference of your treatment for your income tax paid abroad. It can be for tax credit or for tax deduction. For tax credit, we get first for your tax due, you deduct the tax credit, the amount for your net income tax due. For your tax deduction, it will be added as part of your deduction. So from your gross income, we deduct the amount of your income tax paid abroad to get for your taxable income. Okay? So the rule, taxes are deductible or deductible based on their actual amounts, except for certain items of taxes, which includes their surcharges and penalties. What are those? We have your income tax, we have your value-added tax, we have your SC tax, and we have your donor's tax, including a special assessment. Also, income tax abroad can be deducted. Okay. So ang rule dito it can be deducted if ever it is claimed as tax deduction. It cannot be deducted if it's claimed as tax credit. Okay? So the rule for income tax abroad, if it's tax credit, cannot be deducted. If your treatment is tax deduction, then you can deduct it. Okay? Again, taxes are deductible based on the actual amount of tax paid. Next type of itemized deduction is your losses. So for losses, this must be based again for your actual loss. So this must be based on your actual loss, and it must not be compensated for by insurance. Because guys, if ever it is compensated for by insurance, you did not incur any loss already. You did not incur any loss because nga compensated na siya. So it must be necessary that it must not be compensated. Okay? So what are the different forms of your losses? Any loss, so long as there is a loss, whether it arises from fire, storm, shipwreck, other casualties, robbery, theft, or embezzlement. Whatever is the reason of your loss. Okay? So losses are deductible based on your actual loss. Please connect here your dealings in properties. If still remember, the ordinary loss and your capital loss. So the ordinary asset, if ever we have a loss, we call that ordinary loss. This is still deductible in full. How about a capital loss? It can only be deducted to the extent of capital gain. Okay? So this is one of our very first topics. So I hope you still remember it. In your dealings in properties, we still have losses there. So what are the losses there? We have your ordinary loss and capital loss. So ordinary loss, it is deducted in full. Capital loss, it can only be deducted to the extent of your capital gain. Okay? So please review that again under your dealings in properties. So losses, no limit, based on your actual loss. Next, bad debts. So for your bad debts, we just need again the actual bad debt. Okay. So per accounting, our bad debt expense is based on your estimate. So pwedeng percentage of AR, percentage of sales, pwedeng aging of AR. So those are different modes of estimating your bad debts. However, under your taxation, bad debts equals write-off. So whatever is the amount of write-off, this is the actual bad debt. Okay? This is the actual bad debt. The rule under your bad debts is write-off is deductible, while recovery of write-off is taxable. Write-off is deductible. Recovery of write-off is taxable. So for example, year 1, year 2, you provide their bad debt expense of 300,000 for year 1. For year 2, 200,000. And then you have your write-off of 50,000 for year one. And then you have a recovery of 10,000 in year two. So what is the treatment? This 50,000 will be considered as a deduction on year one because we say write-off is deductible. If there is a recovery, the recovery of the write-off is considered taxable. So meaning on your gross income, the following, or on your taxation or tax return, the following will be shown. The 50,000 write-off is considered as a deduction, so we can deduct that. And the 10,000 recovery is considered taxable, so we will add that on your gross income. So the presentation is like that. Write-off is deductible, recovery is taxable. Okay? But what is the bad debt under your tax basis? Under tax basis, the bad debt is equal to your write-off. Under tax basis, the write-off is your bad debt expense. Next, we have your depreciation. So your depreciation, this must be based on actual amount of depreciation. But for your actual amount of depreciation, since we are only estimating it, under our law, the actual amount of depreciation is based on a reasonable ground of depreciation. So meaning, so long as your depreciation method is reasonable, the useful life is reasonable, then we can include that as part of your depreciation. So depreciation, there's no limit for this one. Whatever is the amount of your depreciation, whatever is the amount of your depletion, we include that. So long that the amount of your depreciation or depletion must be reasonable. Okay? And take note, the allowance for depreciation should never exceed the cost of the property. Okay? Di ba naalala nyo, on our principles, we said the cost of property should not be expensed outright, so cannot be outright, but it must be amortized over the life. So we must spread the cost. This is now the result of it. Your depreciation and your depletion. When do we incur your depreciation? Based on your property, plant, and equipment. Depletion on your wasting assets, particularly your, for tax purposes, our normal types of wasting assets are oil and gas wells. So this is one of the normal type of wasting asset for depletion. Okay. So for itemized deduction as depreciation or depletion, again, this is based on your actual amount. And what is the actual amount of depreciation or depletion? Based on the reasonable amount of your method of depreciation, including the useful life. Next, we have your charitable contributions. Okay, so we have here another limit. So let's review the items with limit. So ano yung una nating na-discuss na may limit? EAR, 1/2 of 1% or 1% of the net sales or receipts of your sellers of goods and services respectively. Next, we have your interest expense, which we will deduct arbitrage limit. Another expense that there is limit is your charitable contributions. So under your charitable contributions, guys, here, not all types of charitable contributions are deductible in full. So this can be deducted based on actual amount or based on a limit. So the question is, when do we deduct at the actual amount and when do we deduct based on limit? So we have the following the charitable contributions subject to full deduction or actual amount. So what are those? We only have 3 items. 1, 2, and 3. So the first one is your donation to Philippine government for priority activities. Sir, what are these priority activities? So these are your different activities marked by the government as a sector or industry that is prioritized on its different projects. So what are the normal priority activities of the government? We have your education, health, youth, sports development, culture, economic development. Those are items of priority activities. Sir, on a taxation problem, when do we learn if that is a priority activity or not? Sasabihin ng problem na it is a priority activity. So the problem will always tell you that it is a priority activity or not a priority activity. Next, donation to foreign institutions. These foreign institutions are normally known as your international organization. What are some or international organizations that you know? We have your UNICEF, so World Health Organizations. So those are different international organizations. But take note, not all international organizations, if you have a contribution to them, can be deductible. So what international organization or foreign institution can we deduct in full? Only if we have a treaty or agreement or a law which provides for a full deduction on that foreign institution, or we have an agreement together with that foreign institution, then we can deduct it. Okay? So, sir, when can we again know if that is a donation to foreign institution, that there is agreement? Again, the problem should split it. Lastly, donations to accredited NGOs. Your main concern here, it must be an accredited NGO. Okay. So what is our mnemonic here? We have your PFA, Philippine Government for Priority Activities. So Philippine Priority Activities, foreign institutions, and accredited NGOs. Take note, the NGOs must be accredited. Sir, who will accredit? It must be the proper government agency. So the government agency with the task to approve that government organization must be sanctioned properly. So the NGO must have a certificate from that particular government agency. So for example, for sports, so we have your PSC, diba? So welfare, we have your DSWD, mga ganon. Education, we have your DepEd. So those are different NGOs. Let's say for education, pwede siya dapat for DepEd. Kailangan sanction siya by DepEd. So kailangan accredited yung NGO. Sir, what are the different accredited NGOs that we have in the Philippines? Actually, I don't know who are the accredited NGOs here in the Philippines. So for taxation problem, you must only look whether that NGO is accredited or not. So sasabihin niya ng problem kung sakali man. Okay, so after knowing those contributions that can be deducted in full, what then are the deductions that are subject to limit? So all other donations, right? All other donations or contributions are subject to limit. And what is the limit? So we have here either corporation or individual. For corporation, 5% of net income before the contribution. Take note of the word use, before the contribution. And for individual, it is 10% of net income before the contribution. So how do we apply that? So let's say, for example, we have here your sales or receipts. So let's say we have your net sales of 1 million pesos. You have here depreciation of 100,000. We have your cost of sales of 300,000 pesos. We have your bad debts of 30,000 pesos. We have your salaries, wages, 250,000 pesos. Okay? And then we also have representation. Wag nang representation, may limit pa yun. Interest expense na lang. 20,000. Okay. So assuming you are a corporation and you are an individual, and you have here charitable contributions, which amounts to, let's say, 25,000 pesos. Okay? So you have charitable contributions amounting to 25,000. Again, if there is a limit, just compare the actual versus the limit. Whatever is lower, then we have your amount of deduction. So for corporation, we get first the net income before contribution. So we have here your contribution, right? So kunin nyo muna yung net income before that contribution. So 1 million, less depreciation, less cost of sales, less bad debts, less your salaries and wages, less interest expense. So we have here 300,000 pesos. Okay? So our limit for corporation is 5% of 300,000 pesos. So we have here 15,000. You compare with your actual, which is 25,000. What is lower? 15,000 pesos. Okay? Next, for individual, we have here our limit of 10% of the net income before contribution. What is the net income before contribution? 300,000. So this is 30,000. And our actual amount is 25,000. What is lower? 25,000 pesos. Okay? So again, in your charitable contributions, you just need to know if that is fully deductible or not fully deductible. If not fully deductible, 5% for corporation, 10% for individuals. Sir, why is it lower ang limit ng corporation kasi individual? Kasi mas malaki daw yung income ng corporation, kaya mas mababa yung limit. Pag individual, mas mababa naman yung income, kaya taasan natin yung limit niya. Okay? So 5% and 10%, net income before the contribution. So you deduct all deductions first before the contribution, and then you multiply that to the percentage. You compare the actual versus limit, whichever is lower, yun yung amount na kukunin natin. Next, we have your research and development. This is the second to the last item of our itemized deduction. For your research and development, based on our principles of deduction, if it can be capitalized, then capitalize it and just amortize it. Okay? But if it cannot be capitalized, then it is considered expense. Okay, so that's based on our principle. However, here, if it's not chargeable, outright expense, meaning it is not capitalized, but if it's chargeable, you have two options. You can claim it as outright expense or amortize over 60 months. So here, there is no limit again. There is no limit as to the amount of research and development. It is just that you should know when it is expense and when should you amortize. So this one is dependent on the taxpayer, whether he will amortize or it will claim it as expense. So he will either claim it as an expense directly or he will amortize it. That's for research and development. We go now to your pension trust, the last item of our itemized deduction. So under pension trust, to compute for your total deductible pension trust, that is equal to your current service cost plus amortization of past service costs. How do we compute for your amortization of past service costs? Past service costs actually is equal to your contributions for the fund less the current service costs. Past service cost is equal to your contributions to the fund less current service costs, and you spread that out for 10 years. Okay, so it is equal to the total of current service costs and amortization of past service costs. How do we amortize past service costs? 10 years. Let's have an example. Year 1, year 2, year 3. Current service cost is 300,000 always, let's say. And then the contributions to the fund here is 500,000. Here, let's say 700,000 pesos. Okay, so let's compute for the amount of our pension trust expense that is considered deductible. So year 1, year 2, year 3. Okay, so current service cost is always included as part of our pension trust. So we add 300,000 here. So we have here past service cost. Do we have a past service cost here in year 1? Yes, because contributions is greater than current service cost. Okay, so past service cost is equal to your contributions less current service cost. So our past service cost is 200,000. Year 2, do we have any amount of past service cost? 300 versus 300, 0. Year 3, do we have? Yes, 400,000. What do we do with this? So year 1, year 2, year 3. This one, we have 200,000. And then year 3, we have 400,000. This is amortized for 10 years, right? So year 1 until year 10. Nasundan? So tag 20,000 yan. Nasundan? And then year 3, since this is past service cost, that is year 3 until year 12. Kasi nga, for 10 years. So we amortize it for 10 years. 400,000 divided by 10, 40,000. So ganyan siya until year 12. Okay? So how much is our total pension trust that can be deducted for year 1? 300 plus 20, 320. Year 2, 320. Year 3, 360,000. Again, how do we compute for your past service cost? It is equal to your contributions to the fund less the current service cost divided by 10 years. Contributions to the fund less current service cost divided by 10 years. So it will be amortized over 10 years. So for year 1 here, year 1 we have 200,000. That will be for year 1 until year 10. Year 3 we have 400,000. That it will be for year 3 until year 12. So until the 10 years. Okay? So that's how we compute for your pension trust deduction. Now we go with your another type of deduction. So we have here itemized deductions. We have your different items of expenses. Okay? So this is deducted based on actual amount. What are the exceptions to the rule? We have your EAR, 1/2 of 1% for seller of goods, 1% for seller of services. You also have your interest expense. This is equal to your interest expense less interest income that is subject to arbitrage limit. Another, we have your charitable contributions that is not fully deductible. Wala akong pagsusulatan. I'll just erase these items first. Okay. So we have here items of expenses. So general rule, it is deductible based on actual amount. Exception, what are the exception? First, your EAR, seller of goods, 1/2 of 1%. Seller of services, 1%. Interest expense, it is equal to your interest expense less the arbitrage limit. And the third one, for your charitable contributions, we have 5% for individuals and then 10% for, 10% for individuals, 5% for corporation. This is based on net income before your contributions. All other types of expenses, you deduct it on your actual. But take note, you also have certain amortizations here. So ingat kayo dyan sa amortization ng pension trust. Next, we go now with your net operating loss carryover. So under your net operating loss carryover, we said a while back in our introduction, this happens if ever your gross income is lesser than your deductions or your deductions is greater than your gross income. So what will happen? That net operating loss, since sinabi naman dito is carryover, kailan uli nagkakaroon ng net operating loss? Ayan siya. Tapos sabi ng law, carryover daw. Bakit carryover? Because of this rule. It can be carried over for the next 3 consecutive years immediately following the year of such loss. So if ever we have here a loss, net operating loss, because of your deductions is greater than your gross income, so let's say year 1, you can deduct that year 2, year 3, year 4, until such time all the amount of loss is covered or already used. But if ever after 3 years, there is still unused net operating loss, it is already considered expired. So let's say may natira pa dyan sa year 5. On year 5, may natira pa. Yung natira dyan, considered expired na. So again, net operating loss, we have here deductions is greater than your gross income. You can deduct that you can deduct it for the next 3 consecutive years immediately following the year of such loss, provided that at the time of incurring net loss, The taxpayer must not be exempted from income tax. And further, you must not change the ownership over the business. So for example, year one, gross income is 500,000. And the allowable deductions is 600,000. So we have here net loss of 100,000. Okay? So assuming on year two, year three, and year four, you have the following income. Year two, our income is 50,000. Year three, our income is 80,000. Year four, our income is 100,000. So you can carry that over for the next 3 years. Tama? So year two, can you carry over the whole 100,000? No, only up to the extent of the income. So 50,000 lang. So what is the balance of our NOLCO? The balance now is 100 versus 50, 50,000. Year 3, pasok ba yung 50,000? Yes. So magkano pa dito? 30, year 4, wala na kasi ubos na yung NOLCO natin. Okay? So pag naubos na yung NOLCO, okay lang siya. Sabi nga natin, the amount must be covered or used within the 3 years. If after 3 years there is unused NOLCO, it is considered expired. Okay? So dito sa example natin, gamit lahat siya. Paano kung hindi lahat siya gamit? Okay? So paano naman pag hindi lahat siya gamit? So for example, we have here 20,000 income, 30,000 income, and 30,000 income. So we can apply only up to the extent of the income, so 0. How much is the balance of our NOLCO? The balance of NOLCO therefore is 100 versus 20, 80. Pasok pa ba yan sa year 3? Yes, pero up to 30,000 lang, 0. How much is our balance of NOLCO? 80 versus 30, 50. Year 4, pasok pa ba yan? Yes, 30,000 lang. So, magkano pa yung balance ng NOLCO natin? 20,000. Year 5, assuming meron tayong income na 50,000, yung 20,000 ba pwede pa sa year 5? Not anymore. Why? Because it is already expired. You can only carry it over for the next 3 years. You can only carry it over for the next 3 years. So ingat kayo dito sa 3 consecutive years. If ever it is all covered, it's okay. If it's not covered after 3 years or there is still unused, it is already considered expired. By the way, you cannot deduct NOLCO to a loss. And NOLCO should be applied in a first in, first out basis. So assuming here, guys, let's have another assumption. So we have here NOLCO of 100. And then we have here 80,000 income. We have another net operating loss of 50,000 on year 1. And then we have here 40,000 year 4. So we have here 100,000. Can we apply it to 80,000? Yes, kasya pa yan. Meron pa tayong 20,000 na sobra. So loss uli dito. So another NOLCO yan, 50K and 20K. Okay? So for year 4, ang una mong i-apply yung 20,000. And then may natira pa 'di ba na 20,000, pwede mong kunin diyan. So meron pang 30,000 on the NOLCO from year 3. Okay? So you just apply it first in, first out. You just apply it first in, first out for your NOLCO. What are the rules again for your NOLCO? It must be applied for the next 3 consecutive years. It must be applied for the next 3 consecutive years. Okay? So we're done now with your 2 types of itemized deductions, NOLCO and itemized deductions based on actual expenses. So for NOLCO, just take note, net operating loss, but it will be carried over. Carried over for how many periods? 3 years. 3 consecutive years. After 3 years, it is already expired. We go now to your special deductions. Okay, so we're done now with your actual expenses. We're done now with your NOLCO. We go now with your special deductions. This one can either be an actual expense or no expense at all, but by virtue of the law, you are given a deduction. Okay, so let's take a look at your items of special deductions. First one, distribution from a taxable estate or trust. So we have here a taxable estate or trust. There is a distribution or there is a dividend. So for example, taxable estate or trust, we have here gross income of 800,000. It has expenses of 200,000 and then nag-distribute siya ng income to the beneficiary, nag-distribution ng income to the beneficiary amounting to 100,000. This distribution is not an actual expense. Hindi naman talaga actual expense yan. Considered pa nga siyang dividend. Pero anong sabi ng law? The law provides that your distribution from that taxable estate can be deducted. So this 100,000, even though it is not an expense, can be deducted. So what is the taxable income in case that is a deduction? 800 less 200 less 100, 500,000 pesos. So take note, a distribution from an estate or trust to the beneficiary is considered as a deduction. Next type of deduction, under special deduction, we have your dividend distribution of a real estate investment trust. So if ever there is a real estate investment trust, again, a dividend distribution. Pag dividend, di ba, you have learned this one in your intermediate accounting, a dividend is not considered an expense. It is a reduction to your retained earnings. Now, if there is a dividend distribution from one company to another, and this company is REIT, then the distribution, even though it's not an expense, this is not an expense. You can still deduct it. Even though it's not an expense, you can deduct it. Next, transfer to reserve fund of cooperatives and insurance companies. So this one, when we talk about transfer of reserve funds or transfer to reserve fund, this is an appropriation. For example, you have a retained earnings. Okay, you have excess retained earnings. You will appropriate that retained earnings into a particular purpose. So this one, you appropriate the earnings of cooperatives and insurance companies to reserve fund. So under the law, even though it is not an actual expense, you can deduct it. O, di ba nakakatuwa? Hindi naman siya actual expense or actual expense man siya, may dagdag kang deduction. So number 1, 2, and 3, it is not really an expense, but you can deduct it. Next, senior citizen discount. Senior citizen discount. This one again is not a deduction. Actually, it is a discount, including discount to PWDs. So the amount of discount is 20%, right? So the amount given as a discount is treated as a deduction. So mag-ingat kayo dito hindi porke discount siya, nandun siya sa part ng sales less sales discount. Wala siya dyan. Nasa deduction siya. Okay? It is not part of sales discount. It is part of your deduction. Number 6, amount that could have been collected or 10% of actual gross income of a practicing lawyer under free legal services. Okay. So here we have a practicing lawyer under free legal services. We call that type of service pro bono. Bakit pro bono? Wala kang mare-receive na amount. For free lang yung legal services mo. O dito wala ka nang expense, meron ka pang deduction uli. Wala kang expense, pero may deduction ka. Ano yung deduction mo? The amount that should have been collected or 10% of the gross income. So let's say your gross income is 300,000 and your pro bono case is 10 hours. Per hour is 1,000. So ang pipiliin mo dyan, or hindi siya or. Hindi siya sinabing limited. So it's either collection or 10%. So it's either the collection or 10%. So times 10%, it's either 30,000 or the amount of the collection in case it is to be collectible. Kasi dito wala ka namang i-collect. So kaya ang tinawag dyan ay could have been collected. So ang could have been collected mo, 10 hours times 1,000, 10,000. So ayan yung pwede mong deduction. So walang expense, pero meron kang deduction. Ito, 15% additional compensation expense for senior citizen employees. Okay, guys. We're done with items 1 to 6. In this items 1 to 6, there's no actual expense, but there is a deduction. For the next items, there is an expense and we can claim additional deduction. Okay, so we start with item 7. 15% additional compensation expense for senior citizen employees. So let's say you have your senior citizen employees and the amount of their compensation total 300,000. So aside from 300,000, you have an additional deduction which is equal to 15% of that. So 15% of 300,000 is equal to 45,000. So ang total deduction mo ay 345,000. Di ba? Ang saya, may additional deduction ka. Dito naman sa number 8, 25% additional compensation for PWD employees. So assuming PWD yung mga yan, 300,000. You add additional deduction of 25%. So 300,000 times 25%, we have 75,000. Total of 375,000. So additional deduction siya. Aside from the expense, you will add additional deduction. Other deductions. So these are all additional deductions. Aside from the amount, you will add additional amount. So 50% for facilities improvements for PWD. So for example, your building is only composed of your stairs. Okay. 'Di ba? Ngayon kasi kailangan meron kang ramp for your PWDs. Okay. So if you will adjust your building and create ramps, the cost of the ramp plus 50% of the cost is considered a deduction. So kumbaga cost times 150%, that is the amount of your deduction. Okay? Kasi 50% additional siya. Ito ulit. 50% additional training for jewelry enterprises. Okay, so if ever you are in a jewelry enterprise and you have training expense, particularly for creation of jewelry, 50% additional amount. 50% uli, additional deduction for Adopt a School program. So you have an expense for your Adopt a School program. Aside from that expense, you will get another 50%. Another special deduction, 50% additional deduction for productivity bonus under a productivity incentive plan. Take note, there must be a productivity incentive program before you can deduct the additional deduction. So productivity bonus plus additional 50%. So for example, we have your total productivity bonus of 100,000. You will get additional 50%, which is 50,000. What is the total amount of deduction? 150,000. Okay? Kasi nga, 50% additional. Next, 50% additional deduction ulit for manpower and special training to rank and file employees. So if ever you have training or training expense or manpower services expense to rank and file employees, you will get additional 50% deduction. Ito, number 14. Ito yung double the amount. 100% additional deduction for rooming in and breastfeeding practices, but take note, this is only applicable to private health institution. So ito yung mga breastfeeding area natin. Okay? So for example, in UC, we have also a family room or breastfeeding area. Can we deduct the amount of cost for that breastfeeding area? No, because it is only applicable to private health institution. So other institutions, they cannot get for this, but only private health institution. Okay, so for these items, normally it is not provided in problems or for your taxation, but it can come out for your different theoretical practices for your deductions. So again, for this type of deductions, itemized deductions, what did we learn? We have your actual items of expenses. We deduct them. We have your net operating loss carryover. In case your deductions is greater than your gross income, it can be carried over for 3 years. And we have your special deductions that even though you don't have an actual expense, it can be deducted. You have an expense, but you have an additional amount to be deducted. Okay? So we're done now with your computation of your regular income tax under your net income taxation. Okay, so gross income, done. Deductions, done. We have now your taxable income. So on your taxable income, paano ulit tayo mag-compute dyan? Taxable income, you look at your tax table, di ba? So based on your tax table, you compute for your taxable income. And also, we're done with that. So to wrap up our topic on your taxation, we have next meeting for your corporate taxation. This is our last topic already, corporate taxation. And after that, we're done with income taxation.